the NBA facing a major backlash in China after the Houston Rockets general manager tweeted his support for pro-democracy protesters in Hong Kong. In response, sponsors in China pulled their money from the Rockets. Chinese broadcast partners said they wouldn't air their games, and the Chinese Basketball Association, which is headed by former Houston Rocket Yao Ming, has suspended ties with the team. Economically, this is huge. 600 million people watch basketball in China. It's the most watched sport there. NBA China is worth more than $4 billion. Both the NBA and the Rockets GM have apologized, and that has sparked a backlash by fans here at home who think they just caved to the Chinese. But if we can glean anything from the last 48 hours, it's that China's happy to shut down major U.S. businesses there who upset the Communist Party, even ones that are hugely popular and have a long history of cooperation. What could that mean for our trade talks? Joining me now is Dan Clifton. He's head of policy research at Strategas Research Partners. Dan, what do you think this tells us?
Well, I think it's showing the long-term struggle between the U.S. and China as China's economy continues to grow and they start to try and get more global influence. They're going to use their power, that big consumer market that you referenced, Kelly, as leverage. And it's kind of unsettling to Americans of both parties that a communist regime like that could withhold that power over U.S. companies and U.S. brands. In the short term, China's economy is struggling. Their food prices are going up. They're devaluing their currency and their exports are still going down. So they're looking for some de-escalation. The U.S. is looking for some de-escalation. And I think both sides are trying to stay in that narrow lane of how do you get a short-term deal.
Right.
But really what we're seeing here is that long-term pressures, and the NBA is emblematic of that.
You know, you describe a Chinese economy that is slowing and maybe vulnerable right now, but a lot of people responded to what happened this weekend by seeing it the other way and saying, doesn't this tell us how much strength China has? Look, they could silence almost the entire NBA. You know, I'm sure if there was another corporate titan who had a lot of business there, you're not going to hear them speaking out in favor of Hong Kong's pro-democracy protesters.
Absolutely. And I was trying to stress the short term, Kelly, but over the long term, this is where that growing tension is going to be coming from. They have a lot of power to exert as they say, should we have market access? And interestingly, this is one of the key issues the U.S. are trying to get leverage on this week. Are you going to open up your economy, liberalize your economy, and not have these foreign ownership limits of U.S. companies when they come into China? So a lot of the long-term issues are starting to bleed into the short term, and that's telling you that this problem's not going to go away. I just want to make this quick point, is that the response here in Washington, Kelly, has been overwhelmingly negative towards the NBA. Very strong bipartisan support. And what you're seeing is a Cold War developing between these two countries, almost like Russia or Soviet Union in the 80s, where we fought here domestically on the issues, but we had a long-term goal of going up against that other power.
Right.
And it's almost interestingly that the Chinese could be unifying a very polarized U.S. political situation.
They're finding
right
a
now.
way of bringing both sides together. To your point, Dan, it's not as if you're hearing the Democrats on the campaign trail get out there and talk about how we need to engage more with China. If anything, it's the opposite or a mixed bag of responses. So we had reports over the weekend that China doesn't want to have talks about a broad trade deal.
Yes.
So it is a little ironic that a U.S. president who keeps pulling us out of international conflicts is now trying to use our leverage to open up China's market to the U.S. How long do you think President Trump is really willing to fight that fight? And if he cannot do anything to change the Communist Party's behavior, what outcomes are we really trying to get at here?
Absolutely, Kelly. And I would say that what we're doing in the Middle East is very much related to China. The president knows that having wars in the Middle East only distract us from the real challenge that we're facing geopolitically, and that is China itself. That's where he wants that focus to be. At the same time, we don't want to have a conflict. When one country rises up on another country's GDP, we usually have a war. I think in 12 of 16 situations like this, we've had a war. So we're trying to figure out how do we do this without a war? The Chinese have been stealing from us for 20 years or 30 years. Nobody cared. Now that our growth slows, now that they're becoming more powerful, the U.S. is trying to integrate China into the world economy, to speak, right? And so, good luck, right?
Yeah, so, good luck with it. And what do you think if then investors, knowing that this sort of large-scale conflict exists, and yet still looking for some sort of breakthrough or agreement on trade? And it's not just investors, it's business leaders, right, who have to commit capital for the long term here. And a lot of them have been telling us this whole time, whatever happens, we're focused on the growing middle class population and we're trying to, reach new markets and so forth. Are we at a real turning point or not here?
Absolutely, we're at a real turning point. Companies are making a decision to keep their production in China for the Chinese, but any production for outside China is now leaving. So you're seeing the supply chains start to leave China. That's shifting all of the supply chains around the world. That's a huge change. Here, CEO confidence is restrained. That's restricted any type of capital investment until there's certainty. And both sides are lined up trying to figure out how to de-escalate in the short run. But that longer-term battle, that turning point that you referenced, I think is here upon us. It's working into our politics, into our economics, and into our financial markets. And historically, we had a lower price-to-earnings multiple on stocks during the Cold War. As soon as that Cold War was over, that changed. We also had higher interest rates. So the way investors looked at the global world for the last 50 years may be shifting here, and it may be harder to have certainty over geopolitics moving forward.
Yeah, or maybe the certainty is to not engage with the Chinese, and that would be a huge break from the last 15 or 20 years. Dan, thanks very much. Appreciate it as always. Dan Clifton of Strategas this afternoon.